Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicator Explained, we will be using a pattern dec- pattern recognition, and we will be looking for a engulfing pattern which can be bearish or bullish. So we have this engulfing pattern which can be utilized to look for the bullish as well as bearish trades depending on the momentum. So this is a optimization pattern which we can utilize to look for the optimum entry points. So let us now head to the JForex4, the newly released trading platform from the Dukascopy Bank SA. This is the Euro USD chart with the candle period defined at hourly. For finding the engulfing pattern, you get these two options, add indicator or quick search. If you want to know where this pattern recognition is, here it is. Just below the dragonfly doji, which I explained to you in the last session, engulfing pattern. Or you can simply do a quick search. And here you will get it. Alright. So this is the chart of the Euro USD and we have this engulfing pattern. Now, as I said in my introductory remark, there are two types of engulfing patterns, the bullish engulfing and the bearish engulfing. The pattern is simple to identify, and that job is also done more simple by this bracketing of the recognized candle. Now let's look at the concept of it. Let us take one example of bullish engulfing. So here we have this bullish engulfing. Here also there is this bullish engulfing. In this case, there is bearish engulfing. Alright, let's take the example of a bullish engulfing and what it signifies, what it means for the traders. Bullish engulfing happens when we have the last candlestick closing higher compared to the opening price of the prior candle, where the prior candle had a close which was lower than the opening price. So we need to have the two candle combination in which the first candle should have a small body, or even if it is a large body, we will need the second candle to engulf it fully. Now, let's pay attention to the first candle. It should have its closing value lower than the opening price, and that is the main criterion here. In the second candle, what should happen is the opening price should be lower than the closing price, and then it should rise to such an extent to engulf all of these opening and the closing levels of the prior candle with these close significantly higher compared to the opening price. So in that manner, there is a second candle body engulfs the body of the first candle, and that signifies that there was selling pressure in the prior candle. It was going bearish, but now the momentum is shifting, and the kind of buying which we are seeing in the last candle, it is signifying a reversal, and with the momentum pushing the prices higher compared to the prior candle's even opening price. That also means the reversal is almost complete, and this might be the time to go for a buy trade in next couple of candles or even straight away, while giving enough of buffer on the lower side. Now, inverse of it is considered as bearish engulfing. So, if we look at this candle formation in today's session at 12 GMT, this candle had the closing value which was lower than the opening price, and in the prior candle, the first candle, we had the closing value which was higher than the opening price. But this body of the second candle is engulfing the body of the first candle, with this difference between the opening and close being higher than the difference between the opening and the close of the first candle. So only requirement is there is a reversal. The first candle should have closed higher compared to the open price. The second candle should have closed lower compared to the open price, as well as it should have closed lower compared to the opening price of the prior candle. So that signifies total reversal of the momentum, whereas in the first candle there was price rise, but since the body of the candle was small, it also means there was not enough of momentum. But now that in the second candle we have large body, that means the selling pressure was much more sustained, and it also succeeded in pushing the prices below the opening price of the prior candle. So this can be utilized to initiate the sell trade, and in this instance we did saw this sharp move on the lower side. But if we consider the this prior formation of the variation engulfing, it didn't really push the price lower immediately. In the next candle, the price did decline to some extent, but then it reversed course and came back again slightly higher compared to the prior high of this bearish engulfing pattern. Then it reversed course again, forming this bearish engulfing. And if we look at the this bullish engulfing here, it pushed the prices higher by around 30 pips, then came the reversal again. In this case, we had the price going sideways. It didn't really go much higher in next couple of hours. Rather, it went lower. So you will have to pick and choose in this kind of environment, because not all the engulfing patterns are going to be successful. As we saw in this example, here you might have ended up in loss, here some profit, here probably in loss, and then here large profit. So some of the trades are going to bring you a lot of money, some of the trades are going to cost you money, and some of the trades might bring you only a little bit of profit. So as is the case with any other formation or the indicators, you will have to decide which trades to take and which trades to overlook. And also, even if everything is in place, still the trade might go wrong. So that is what we are seeing here. Now, as I explained to you, the engulfing pattern is kind of simple to understand and also easy to spot on the chart. Let's see what we can do in terms of its editing on this platform. There is nothing we can do in terms of editing for the input. Output we can edit, but only in styling terms. We can go for the color combination of our choice. Let's give it a white color. Then there's a bracket formation can be used, or you can even color code the whole of the candle body. So this becomes immediately recognizable. All right, this can also be done. If you want to lower the transparency, that can also be done. So here the transparency is lower. Advanced editing option, recalculate on new candle only. So if you go for this, only once new candle formation takes shape, this engulfing pattern will be recognized on the chart. Highlight the time period zone. Whatever is your calculation period will be highlighted. There is nothing we can customize. So there is no customization from the calculation. Hello, Pavel. Yeah, your suggestion will be taken into consideration, and maybe once we are done with the series in coming months, maybe we will start on Java as well. Thank you for the suggestion. Now, getting back to the editing options, show indicator on all the periods. If you want this pattern recognition to be available on all the candle periods, you have to opt in for this. Else, you simply have to specify on which candle period you want this pattern recognition to be available. So here, now that we have opted for 10 minutes and hourly, we will see the engulfing patterns being recognized on the chart only on 10-minute and hourly candle period combination. But if I change to 15 minutes or any other candle period, there is no more engulfing pattern visible on the chart. Means it is not recognized by the chart software now. 4 hour or any other candle period will yield you no results. But if I again revert back to hourly, you will have it. Okay. So that's about the engulfing pattern from my side. If you have any query or any idea to share about the engulfing pattern, do write to me in the feedback and I will be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out this newly released trading platform, the link has been included in the bio. So give it a try and let me know how it works out for you. So that's all from my side for today's session. I will be back tomorrow with a new pattern recognition. We will see how we can use these pattern recognition formations to look for the entry or even exit points to make our trading more profitable or simply to optimize our existing setups. So that's all. I will be back tomorrow. See you tomorrow. Thank you all for joining in. Goodbye.